I type PlanB in Google, the first three things you see in the search results are big crash is coming, PlanB says the market will crash imminent. How these outlets come to that and attach my name to it, I really don't think crash is coming. I think we'll see a bull market that goes on for at least 6 months. To be honest, I view the on-chain, I think the on-chain analysis, for me at least, is most valuable in identifying tops and bottoms. So identifying FOMO transactions, if you will, around the all-time high, and panic liquidation kind of reactions or transactions in a bear market, at the bottom of a bear market. So, and you know it when you get there, right? So I could not say what the top of the market will be right now, because we're not in a FOMO situation. So at least I know we're not in a FOMO situation, so it is not the top, but I don't know when the top is. And that's of course the difference with the stock to flow, more fundamental model that has gold data and stuff in there, that you can very, very roughly say something about the level you could expect the next Bitcoin price level to be. But on chain, yeah, so at least I can say we're not in a bear market right now, and we're not at the FOMO end of the bull market. So we must be somewhere in between. There's several technical indicators that also say the same thing. So given that fact, I would extend the current uptrend with a couple of months, and that brings us, well, I mentioned the numbers before. Of course, the next 2 months are very well known. I think we will end in the roughly at 98 at least this month already, which is huge. Nobody believes it. And then 135 in December at least. I'm not interested in the top at all. So I don't know when it is. Yeah, when we get there, I know it, but I don't know where it is. I'm not interested in that, because I know it will be probably a 1 minute spike, right? I cannot trade it. I cannot sell or buy at that price level. I'm more interested in the general level where it hovers around. So no, it's exactly like you say. But still, I think we'll go on in Q1, because that's another thing you can measure from on-chain. You can see the shortage that we're all talking about. How many Bitcoins are there? And you guys are really looking at coins at exchanges, and are they leaving exchanges to cold storage or coming at exchanges? But I'm looking at it at an on-chain level, and then you see that shortage building to a moment where it pops, and we're still without telling what I'm looking at exactly, but we're still months away from that popping moment. So I would say the top is at least 3 to 6 months, maybe longer away, and I want to make that very clear, because when I type PlanB in Google, the first three things you see in the search results are big crash is coming, PlanB says the market will crash imminent. How these outlets come to that and attach my name to it, I really don't think a crash is coming. I think we'll see a bull market that goes on for at least 6 months and bring us in the 100,000, 200,000. I wouldn't even be surprised with 500,000 Bitcoin in early 2022. But when we get to the sketchy part, when the FOMO transactions flow in, and you can detect those transactions, they are very distinct, then we have to all be a little bit more alert. The second thing is, I reason from source of value, so alternative investments. If I have a large sum of money, what are my alternatives? So it's equity, it's bonds, and if you look at the commodity space or the non-financial asset space, it's gold, and it's real estate, basically diamonds maybe. That's of course a stock to flow X model. I'm reasoning like an investor, like why would I put my money in real estate, or why in gold, or why in Bitcoin? And there are several aspects to what make a store of value or money better than another one. And one is the visibility, and another is portability, the classic fungibility, and scarcity. So I am not surprised at all that the real estate market is just so much bigger, larger than gold market. And I'm also not surprised that Bitcoin is a little smaller than the gold market. But as soon as Bitcoin, after the next halving, or really this halving, we should get really close to gold market cap. And after next halving, it would really surprise me if an asset that is recognized by the market as a store of value, that has say more than $1 trillion in value, if that store of value with bigger scarcity than gold would not at least be valued higher than gold. So somewhere between gold and real estate, 10 trillion and 100 trillion roughly. So in that sense, I think differently about the 4-year cycle. I think it's not, so the halving is important, not because of the miners selling, the sell pressure from because that's already neglectable. Like Willie said, I mean, big exchanges may be bigger than some of the big miners, and add to that the ETFs and all the other sell pressure. So I think the selling pressure of the miner is not the thing. I think the fact that the scarcity is larger than gold, it is a fact.